amount of time, which obviously is good.
Wonderful.
Hi, Lisa. This is Ankur Mittal.
Yes, hi, Ankur. How are you?
Very well. How are you?
Hello, hello, hello.
Hello.
Hi, Clayton. We can hear you, but we don't see you. Can you please turn on your video? Okay. Yes, Ankur, how is everything in India? Is the lockdown more relaxed? How are you coping with current situation?
Well, they have opened up. I think finally they are realizing that keeping people indoors is not going to solve this problem. We just have to accept the new normal, wear our mask, avoid touching our face, and then just continue working. So they have relaxed it during the daytime. I don't see any sense in that. It's not like, the coronavirus only attacks at night and not during the day. So from 7 a.m. to 7 p.m. you can go out and you can do your normal work. But they have still put a restriction on a lot of things. Travel in either domestic or international has not started. I think that will still take a lot more time. At the same time, the cases are still increasing in India, but that is also a function of us increasing our testing. Our testing was absolutely low. Yeah, I mean, personally, work-wise, it's been very busy, which is, very surprising when I say that these days to many people. But yeah, and yes, I definitely though I do miss, I never thought that I'll miss traveling so much. Till last year, I was traveling almost 150 to 200 days in a year. And I never thought I'll miss traveling so much. I used to complain last year. This year, I'm complaining I can't travel. So I guess human beings can never be happy.
Wonderful. I can see also Sagar Agarwal joined us now. Sagar, can you turn on your camera, please? Okay.
I think it's on right now, yeah?
Yes, we can see you perfectly now.
Yes.
And how's everything in Dubai? Is it getting more relaxed?
I think it's a different world over here. I think I was expecting Dubai to be a little bit more stricter compared to other parts of the world, because it's a small population and you can implement certain laws and regulations over here. But it's not been the case so far. They have been relatively, I would say, easy in terms of lockdown. It's only from 10 p.m. to 6 a.m. in the morning. So that's a bit strange. The cases have not gone down in Dubai. We are almost at 13,000 cases. So strange, but I think life is going on. People are still going back to work as much as they can. There's 30% workforce allowed over here, I believe, so far.
Got it. I can see Clayton finally joined us in full with video and audio. Clayton, can you hear us? Can you see us? Clayton, can you hear us? Okay, let's give him one more minute. Rowan, what's going on in Greece? Is it the lockdown getting more relaxed? We don't hear you.
Good morning, everyone. First of all, I would like to say thank you for being part of this panel.
I can't hear anything. If you can hear me, I can't. I'm going to relog. I've got a problem with my audio. Apologies to everybody.
Okay, yeah, we'll wait for you here. Yes, Sir Robin, how is everything in Greece?
So until now, the government did a lot of, it took very severe measures in order to avoid serious consequences regarding the situation in Greece. And until now, we are quite satisfied from what the government did. They are starting now to open up again the economy. But the big question for Greece is going to be what is going to be left from this season regarding tourism. As you might know, tourism is 20% from the GDP in Greece. So it's a very important issue for Greece, how the hotels are going to operate. So now they are working very hard on that. Probably from next week, we're going to have more information regarding how it's going to work. They are talking about maybe immunity passport or some medical protocol in order to start. And they are speaking about 1st of July to go back to business and to open up the hotels. But of course, it's going to be something different than what we used to know. It's going to be a little bit different. Hopefully, for the next 2021 season, things will be back to normal.
Wonderful. And Raj, can you share more information about what's going on in US?
Here in the US, many of the states, over 30 states have already opened up. Where I'm based out of Louisiana. We're opening up on the 15th if things go the way they are at the moment. Many businesses are opening up with curbside services. Even retail, some of the retail stores are opening up. What they're doing is they're asking the customers to order online and just do a pickup at the curbside, basically grab and go. So things are going to be drastically changed the way it was conducted, and the business will be conducted here in the US going forward. And as Mr. Terza said earlier, the way things are going, technology that he was mentioning earlier, video conferencing, the lack of travel or the need for travel is going to be, things are going to be different. A lot of people are going to be afraid. There's already a lot of the news are saying that if we open up the entire nation altogether, people are going to get together and the pandemic is going to spread even more aggressively. The beaches have opened. The very first beach, which opened up a couple of weeks ago in Jacksonville, Florida, it was a Friday. People just rushed out there, and starting, I think, the following Tuesday, they had 10,000 cases, which was ridiculous. It was, and people still need to take precaution. For some reason, people don't take this very seriously, but back where I'm from, I'm originally from India, and people are going to start going back to namaste as opposed to handshakes. That you can definitely count on.
Yes, that's for sure. Great. So let us do one thing before we're waiting for everyone else to join. I would like to ask you to introduce yourselves in turn. Please try to do that within 1 minute. We're interested to know your name, more about your company, where you invest, what you do. So let's start with Sagar, please.
Sure. Thank you again, Lisa, for organizing this webinar for everybody. I think it's interesting to see panelists from different parts of the world to get to hear their opinion as well. Myself, I'm Sagar Agarwal. I'm a Chief Investment Officer and Managing Director at Nimai Capital. We are active investors or in financial inclusion space. We are looking at building a portfolio, private equity portfolio in financial inclusion, creating impact in India and Africa both. So we're raising our first fund, which is a $150 million fund. And historically, we've advised on independent transactions for more than a decade. Myself, I've been investing in private equity for more than 14 years now. I've advised on more than $550 million of AUM between India and Middle East, 30 plus investments, 9 plus liquidity events, 20% plus IRR in dollar terms. And recently, I've joined hands with Nimai Capital to launch this platform for emerging markets.
Mm-hmm. Thank you. Thank you very much, Sagar. Cledon, can you hear us now? Yes, you can?
Now I can, yes. Apologies for that, rather embarrassing. Good morning to everybody.
Good morning. Tell us within 1 minute who you are, what you do, where you invest.
Right. My name's Cledon Mandrick-Pero. I'm based in Switzerland, investing primarily in infrastructure-related services, small ticket sizes, anything between 50 to 100 million, linking family offices and some smaller size institutional investors.
Mm-hmm. Thank you. I like your definition of small ticket size. Okay. Ivica, please tell us more about you.
Yeah, I like the definition too. I think then we are in the microspace. But anyway, so I'm Ivica. I'm in Singapore here working for the Riverside company. I'm in M&A and strategy about 18 years. I started in Siemens, where I was part of the corporate M&A department, working on strategizing corporate decisions and unorganic growth policies. And then around about 11 years ago, I joined the American private equity company, focusing on the lower end of the middle market. To be very specific, so the transaction values are usually between 30 million and 150 roundabout. So this is really the bulk. It's about 5-6 million EBITDA up to 15 maybe. So this is usually the type of investment. The companies are usually niche leaders in something. Obviously, many businesses are coming from the digital world and software SaaS business models, but also doing very much traditional things. 7 years ago, I started the Singapore office, working on Southeast Asia, means Malaysia, Indonesia, Vietnam, in this part of the world. And I'm very happy to be the first time here in this round, and very excited about that. Thank you.
Thank you, Vitsa. Shubhang, please tell us more about you, what you do, where you invest within 1 minute.
Thank you, Lisa, and hello, everyone. My name is Shubhang, and I'm a managing director with Syngenta Venture Capital. We are the corporate venture capital arm of Syngenta Corporation, which is a global leader in agri-inputs. So we manufacture chemicals and seeds. I'm also based in Switzerland, in Basel, at the headquarters of the company. We are a very typical corporate venture capital fund. We invest up to, typically under $10 million per round into a company. Have a portfolio of about 30 startups that we've invested in. Early stage investors, so seed to Series C, Series D investors. Have a portfolio of about 30 companies built up over 10 years. Deployed a little over $150 million of capital, give or take. The aim here is, to invest in companies that have the potential to deliver a strong venture capital style financial return, as well as be linked to the company's strategy. Very happy to be here. So thank you for the invite, Lisa.
Thank you. Ankur, tell us about you.
Hi, good morning, good afternoon, everyone. Raj, I have no idea what time it is there, but must be very late in the night.
Yes.
So I'm Ankur Mittal. I'm based out of New Delhi, India. I have a background in investment banking for bulge bracket banks in New York and London. An active angel investor for last 8+ years. And then 2 years back, set up our angel. So I'm a founder of Inflection Point Ventures, on its way to become one of the largest angel networks in the country, as well as outside India, hosting something specifically for Dubai and Singapore in a couple of weeks. And we are early stage investors, unlike a lot of you guys. We typically write a check size of anywhere between 100,000 to 500,000, though we have written a few checks going up to $2 million as well. But we typically like to come at seed, pre-series A, latest till series, bridge and series rounds. That's typically our forte. Don't have sector, we are sector agnostic, but we prefer B2B tech businesses, but we are not adverse to any idea. And because of the, we are kind of trying to bring a PE investing model into VC. I don't know how successful it will be, but so far it has been fairly successful for us, generated as excellent returns. Hopefully, touch wood, it continues. Thanks.
Wonderful. Robin, tell us about you, please.
Good morning, everyone, and good afternoon. So I'm the founder of RMG Investments. Our headquarters are located in Athens, in Greece. We are a boutique firm that specializes in alternative investments in Southern European countries. We are dealing with real estate, hotels, renewable energy, and medical cannabis. The investment depends on the sector. If we are speaking about renewable energy, we are focusing mainly on solar projects, everything between a couple of millions up to 100 million. Now we also are looking at a lot of opportunities that are emerging from the hospitality sector. It's also important to understand that in Greece, the ticket sizes are smaller than other markets. So that's also can be around a couple of millions up to 20, 25 million. And in the medical cannabis, we are more as we are as advisors to European countries that want to establish a strong presence in the European market. We believe that this market is going to be one of the most prominent market in the world. We are speaking about 130 billion euros in the next 5 to 6 years. And of course, we are linking our connections to the different kind of investments. We have a lot of family offices, VCs, private equities funds, and we are also working with NPL services.
Thank you, Raven. Raj, can you also introduce yourself within 1 minute?
Sure. I'm Raj Patel from US. First of all, very nice to meet everyone. This is my first time. I just recently became a member. I have a very diversified portfolio. I'm an investor myself. We invest in hotels, drug rehab facilities. We have gas stations, Subways, Little Caesars, assisted living facilities, and we're venturing out into mental health as well. We have some private-public partnerships with the local government here in Louisiana. And given the current situation in the U.S., as they say, in chaos, there's opportunities. In the process of forming a fund to acquire, hospitality assets for pennies on the dollar, basically. That's a very brief summary.
Thank you. Thank you very much, Raj. I see one of our guests join us here today, Shravan Verma from Singapore. Shravan, can you please introduce yourself in 1 minute? We don't hear you. Unmute yourself, please.
Oops, sorry about that. It always happens. My name is Shravan Verma. I'm currently in Singapore in a health tech startup called SpeedDoc, where we're essentially delivering medical care at home using in-person as well as telemedicine. So the current situation has really, affected our demand quite a bit. And we've been working on trying to scale our operations. And really appreciate being part of this panel. I'm also a recent member like you, Raj, so happy to be part of this.
Wonderful. All right, so some of you are quite familiar with the format. So after we finish our roundtable discussion, we have an opportunity to conduct one-to-one meetings with the most interesting participants. So some of you are pretty experienced, but the others are not. So let me quickly run you through how you can request meetings and where you can see everyone. Okay. Perfect. So let me share my screen with you. I don't know if you can see anything. Oh, okay, sorry. Yeah, you can. Wonderful. So we have the app, which is called Connecting Leaders, right? You can download it from Google Play, from App Store. You have the link in the invite that I sent you, okay? So here you can select the event we're having today, the 9th Leaders Virtual Summit, and you can click on participants. You can see, we scroll down, we can scroll up, and we can see everyone who participates in the summit. So you can see the investment interest of the investor. You can see more information about the project if it's a project owner. So what you can do, you can simply send a meeting request, and we will see it, and we would be able to schedule a meeting for you post the summit or later in the week. Okay, so all information is there. Again, if your profile, you can see all information of your profile. You can change it in your profile section to make sure that your investment interests are being updated, and it always has relevant information about yourself and what you do. Okay. Raj, you need to update your picture. We don't see your picture.
Even my profile is not complete setup yet.
Okay.
I got a call from Anna around 2:30, 3 o'clock afternoon my time. She walked me through on how to go ahead and use the application.
Perfect. I see that Hussein Al Marhoun joined as well. Hussein, can you hear us? Can you see us?
Yeah, hi, good morning. Good morning, everyone.
Good morning.
Good
Would you
morning.
be able to turn on your camera because we don't see you?
Yeah, give me a second, please.
Wonderful. Hi, Hussein. Yeah, so before the summit, we usually gather sometime before to exchange information, to introduce ourselves. So what's going on in Saudi? How are you coping with the lockdown?
Well, actually, in terms of the health-wise, luckily we were so impressed by the health sector movement and health ministry of how quick have responded and done the whole place. And they started making the random test in random places. And that's really was very, very comfortable for all of the people, that knowing that they're safe and they are under safe hands as well. From the business side, we have actually, because we're managing a fund, venture capital fund, we have noticed that the initiatives from the government investment entities, they are pushing us toward keeping on injecting money into the market to support the SMEs and venture ecosystem in general. So we think things are gonna be tough, rough. It's gonna be slow for the coming few months. However, people started getting moving slowly and carefully as well.
And can you also, within 1 minute, introduce yourself and explain more about your company and your investment interests?
Absolutely, absolutely. So my name is Hussein, and I'm coming from a corporate banking background, then shifted to run my family business. And then we started diversifying our investments. Then I decided to move on and establish my own venture capital fund for me and my partner as well. So right now we're managing a new fund. It's focusing on tech startups all over GCC plus Jordan and Egypt for the talent over there, obviously. And this fund is basically sector agnostic. Would like to help all the entrepreneurs from all over the place to access a new markets, to make synergies between our portfolio companies and our network as well. So this is in a nutshell what we're doing right now.
Mm-hmm. Wonderful, Hussein. Thank you. We have a few more minutes before we start the summit, the roundtable. Yeah. Daniel, I see that Daniel Testa also joined us now. Daniel, can you hear us? Can you see us? Okay, I think he's taking a few minutes to put everything in place. Great. So it's really nice to see all of you here today.
Really?
And I would like to also welcome our today's viewers. A lot of heads of companies, family offices, and business owners from major parts of the world have joined as listeners today in different channels. And we're welcoming them here as well with us. I would like to remind you that if you want to get a complete information on current participants of the summit, you can always get this information in Connecting Leaders app. You can also update your profiles in Connecting Leaders to make sure that everyone with relevant interest can find you and request a meeting with you. And of course, through the app, you can follow the events, you can see the participants, and you can register to participate as listeners and as speakers there. Everyone knows, of course, that in the context of the global coronavirus pandemic, the governments of all countries have imposed severe restrictions on movement, travel, and business activity. And this has unfortunately led to disastrous consequences for the entire industry, such as logistics, travel, tourism. Supply chains are being disrupted, production is halting, and the economy has officially entered a recession. And this is why thousands of business leaders and leaders of investment companies from the Global Investment Leaders Club use this opportunity like today, the virtual summits, as well as private one-to-one virtual meetings to maintain contact, to exchange experience, to exchange the opinion on the situation, the projections. And basically the main purpose of such meetings like today, as a part of the Global Investment Leaders Club initiative, is to help each participant, each member of our club, to get more resources, to get more information, and to get access to investment for the mutual strengthening of our businesses. And today's summit, I hope as well, will give you an important information and understanding of the moods of other investors and participants of the global investment industry, which would help you strengthen your business or even get an alternative point of view. Following the pause, a short pause by May 2020, the leaders of global investment industry have begun updating their investment strategies and portfolios. So, hi Sanjit, can you hear us?
Yep, I can hear you, yeah.
Okay, perfect. Yes, so a lockdown and a rapid entry into the lockdown, into the recession, unfortunately has deprived all investment forecasts of their familiar predictability. And of course, some companies got more lucky, they're trending, the others got less lucky, they're cut out of total economy and no funds are going there. But however, the new conditions of this new economy, which have lost predictability, created a situation again for a big gain or a big loss, depending which place you're standing at. And we would like to discuss it with you and hear your opinion. Before we begin, I want to say a few words on a format of a discussion we follow at the Global Investment Leaders Club. Some of you are quite familiar with it, the others are here for the first time, so I will repeat it anyway. The expressing your personal opinion is a key. So please try to be as open as possible in expressing what you personally think. We don't want to hear the opinion of your analytics, of something that we can hear on the news. What is really important is to hear your personal opinion. And as well, opinion of each of us is very important. So we don't debate or argue the opinion of others. You would have precisely 3 minutes to make your speech. I have this beautiful blue hourglass in here, which is set for 2.5 minutes. When you will start speaking, I will set it. And when I see the time is up, I will raise the hourglass so you can look at my picture here. And you know that you have 30 more seconds to wrap up and finish your speech. And then we will go to the next speaker. As well, it would be helpful if you can say, I finished, when you are finished, so we know that we can pass the word to the next speaker. I will publish right now in the general chat box a list of speakers so you would know when it is your turn to speak. We will start with Ivica. 1 second. I have too many participants now, I cannot find the chat box. Found it. Okay. Can everyone see it? Perfect. Perfect. Right. So coming to the question number 1. In the conditions of rapid increase in recession, reduction of consumption, destruction of efficient supply chains in majority of sectors, we need to answer the most important questions. First of all is, what is the global investment industry today? Is it bringing new risks or greater opportunities? And of course, what increases a risk level of your investment and what opens up new opportunities? Please, Ivica, you have 3 minutes.
Yeah, it's a very general question, and obviously it's good to answer on this type of topics, which is obviously on everybody's mind. I think in general, for me, the crisis what we are facing at the moment is fundamentally not changing the path and the macro trend we would see anyhow. So digitalization is nothing new, and video conferencing is nothing new. So I think fundamentally first that this is fastening the change and enforcing the change instead of creating the change, which is a very important fact. Secondly, what I see now, and to a certain extent, I'm happy that we have a little bit some situation where we have to focus on the fundamentals. So in the old days, what was private equity? Private equity was somebody was having a big chunk of money on the bank account. This was private money, private equity. And all the competence was to find a buddy who has something to sell, and then you become a private equity investor. And then you were sitting for 3 years on your asset with zero involvement and competence. And then you was just selling it for more than you paid for. And this is just what was private equity. And I think this was not enough. And what we see now, the crisis will focus more on what you can actually contribute to make a company successful. So how can you improve your operational capabilities and processes in the business? And how can you open up new markets? So when I'm talking today with entrepreneurs, the first question what they're asking me is, what can you bring to the table I don't have today already? And don't tell me money, because money, I have more money than I need, and the bank is trying to give me even more than I have. So don't come with this answer. And when you look back, actually, this is exactly the trend a maturing industry is going. It goes into competition and excellence. And this is what I see, the glass is more half full than half empty. So this gives an opportunity to really step back for a moment and really think through your processes, your markets. I was just talking this morning to an entrepreneur from Jakarta, and he sits on 600,000 e-commerce users and is interested in taking something in the Indonesian market. So this type of approaches is really what is changing the business, and obviously the situation we have at the moment is supporting this. And yeah, this was my very general comment. I finished.
Thank you very much, Ivica. Shubham?
Yes, thank you, Lisa. I think maybe I can bring perspective to complement what Ivica said from the earlier stage companies and early stage investing, where I think the challenges are different. I mean, firstly, I think the crisis as it is for different sort. The past financial crisis was a crisis of investor confidence and perhaps a crisis of liquidity. This is a crisis which worries me more, because this could be a crisis of demand. And based on the kind of lockdowns and restrictions that governments have imposed, my worry is that consumption is going to fall, which worries me substantially more. You can always, provide investor confidence and provide liquidity into the markets, but getting demand back to where it needed to be is a big challenge. I do agree with Ivica's point that there are trends that we saw that are going to get accelerated. We have invested in e-commerce companies in agriculture, and in markets like India, markets like Indonesia. What has happened is that people who were biased towards purchasing offline now have been forced to try out online purchases. That kind of adoption is something that no marketing dollars can buy. So now, the entire trajectory of many of the startups and many industries has got lifted up. Again, that's industry specific. I mean, in some industries, especially as we saw the news about Airbnb, the situation is much more different. So I think because the impact is on demand, the demand varies substantially by sector and by segment. So agriculture, which is where we invest in, is a more resilient sector. I would have to consider ourselves a little bit lucky that our business has not got impacted so badly yet, but continuing destruction of demand is something that worries me. Now, from an investment side, I would say, for the first few weeks after country after country started imposing lockdowns, restrictions on travel, investors kind of went into a standby mode where they were not really willing to commit to new speculative investments. Everybody was worried about the health of their existing portfolio companies, and uh, you know uh, events and conferences got cancelled, and those are the places where venture capital investors find startups. So we were not really sure what the investment landscape would look like. I think in the last couple of weeks, things have perhaps adjusted and people have got more comfortable to the idea of, backing companies without doing those three visits to meet the founder in their office kind of model. So I think the investment landscape has not been as badly impacted as we initially thought it would be. But I am also, always conscious of the fact that the lockdown story is about 6 weeks old, give or take, in most countries. So what the impact will be going forward, that's something we need to take a look at. That's all from me. Thank you, Lisa.
Thank you, Shubham. Sagar?
Yeah, hi. Thank you, Visa and Shivang, for sharing your views. Just adding a couple of more points to that. I'm generally bit more optimistic about investment opportunities. I feel when everybody is fearing, that's the time you need to be greedy, and when everybody is greedy, that's the time you need to be fearing a little bit more. I think, as we all know, this COVID has been a last 6 weeks scenario. There are certain sectors is definitely going to get affected in this segment, which is the banking, as we know, the informal economy, in general, the gig economy workers who've been living off daily wages. Those are the segments which are going to get significantly affected, right? But what's the impact going to be on the overall incomes? What's the impact going to be on the overall sentiment is still to be tested in the next 3 to 6 months. Obviously, we'll get to see a better sense of it. Based on the conversation that I'm having with the majority of the entrepreneurs across India and Africa, the feedback is that yes, there's a considerable slowdown in the market. People are taking a backseat in terms of doing businesses. The movement of goods and logistics and money is not really happening at the same pace. The velocity has gone down, and that's obviously going to affect the cash flows, the rolling of money, which is where the business and the economy is run. That said, there are certain segments which are doing much better. As we all know, we know that gaming sector has done significantly well. We know education sector has done significantly well in these markets. Online shopping is catching up. OTT segments are catching up. There are interesting opportunities which are more and more, I would say, people are spending time looking at news, reading different articles, spending podcasting, video, short format videos. Pretty much all of those sectors have done fantastically well. The user rates are very high, retentions are very high, the consumption levels are extremely high. I think, the more and more advice that I'm at least giving to majority of the entrepreneurs that I'm talking to is that, time is to just see that if you can actually retain enough cash, reduce your cash burn, for next 12 to at least target for next 12 months, and see if you can get a bridge round in between. If the business model is solid and it was actually not dependent upon cash burn, and was not dependent upon only attracting consumers through discounts and cashbacks. If you had a more sustainable business model, then we should really look at building your cash position for the next 12 months. So that's the long and short of how I'm seeing the market globally, or at least India and Africa, the two markets that I'm focusing on.
Thank you, Sagar. Ankur?
Thanks, everyone. Most of the points I jotted down kind of have been covered. But basically, I agree, this is not a financial crisis. This is not a liquidity crisis, but it has the potential to become far worse. And that is because with a lot of people are going to be out of jobs, companies like Airbnb and Uber, they're all announcing layoffs. although Airbnb were giving a very generous package, but that generosity will start reducing amongst other companies. And the problem is we are fighting an enemy we can't see, we can't touch, we don't know what the enemy is, and we don't have a solution today. We don't have a vaccination today, so we don't know how long will it last. And so its potential can be far worse than a financial crisis where the government could pump in money, could print more notes, and get the economy back. And so what will happen is that while it will affect a certain kind of business, and there will be a lot of businesses. We saw Gold's Gym, like filing for Chapter 11. We have heard news like J. Crew and all that. All these stellar names that have been around for so long, filing for Chapter 11. At the same time, there is going to be a lot of the companies like Peloton, they are recording their, they are reporting record sales. So and like they say, anything you do for 21 days become a habit. In India, there is an opportunity. While India has a billion population, but the number of internet users, the number of online shoppers was not increasing. What this crisis has done is it has just skyrocketed the number of people who have started ordering online. And so while the retail and the commercial retail and shopping malls and that business could get affected, the online delivery, the online shopping, the online grocery, those businesses will develop. EdTech will develop new ways to educate children and adults of all ages. A lot of new other models will get developed. We had invested in, as luck would have it, we had invested in 2 health tech startups in January, and this is still pre-COVID. And they were getting some support, but come March, the demand just ballooned. Like they had just no way to control their growth. So we will see new models getting developed, and that's where I agree with Sagar. I think there is opportunity. While we are working with our portfolio companies and trying to minimize their cash burn, especially in businesses where there is zero revenue, and we are trying to keep them viable, standing when this magically somehow is over and the world restarts. They should be standing at that time. But the fact of the matter is some will not, and that's just a harsh reality. But at the same time, it's opportunistic. If you look at the history, all the top companies, whether it was, General Motors, GE, Microsoft, even to some extent, Facebook, these are all products of recession. You get great talent for cheap. You can build strong products, greater, loyal customer base. So I think it's a great time to invest. Yes, the sentiments are negative, but there will be opportunities. The good thing is at the stage at which we invest, we typically fund 12 to 18 months runway of a business. And so that way, if we look at businesses which have potential and we can give them 12 to 18 months runway, as the world will come out of it, I think there's great opportunity there.
Thank you, Ankur. Hussein.
Yeah, so I'll take a general opinion of this, if you don't mind. So I'm coming from a family business that has been into the market for the last 60 years. So we have, as a family business, we have seen so many turbulences down the road. And then since I started my career, I've been there into the 2008 and then 2015. So this is the third crisis I've been through. So it's just another turbulence. It might be bigger. It might be, I don't know, it might take longer time, but it's just another one. There will be a lot down the road as well. So what we're focused on as a venture capital is to make sure of few points: efficiency, cash flow management, cutting costs, adjusting and adapting to the new reality, because this is the reality. Things are not gonna go back to where it was 4 months ago. That's a very simple reality. So for us, we think in the short term, it's not very optimistic, but we're optimistic that a lot of new investors, family offices, new investor, PE as well, some private equity investors are coming to the space, and they started investing into startup ecosystem, which will enhance the whole scene, startup scene. And so we are very much optimistic in the long run. In the medium term, we think things are gonna change to the better for sure. Thank you.
Thank you, Hussein. Raven.
So I will start with our macro perspective. So we started this epidemic with a serious crash in the markets, and then central banks started to put a lot of liquidity inside the markets. They started with trillions of dollars in order to put some liquidity inside the markets, and that's sort of stabilizes the crash. Since then, we are starting to see some recovery in the market, although we think that it's still early to say that this crisis is behind us, because now we are starting to see a lot of macro data that is going out, and the data is terrible. So we believe that with the new Q2 reports and the macro data, the sentiment will go backward. From the other side, we think now that the cash is the king. So a lot of funds, private equities, family offices waited to this crisis in order to start and invest in lower valuations and to find some opportunities. And as already been said here, a lot of opportunities are emerging. Of course, depending the sector, depending the country, depending the situation. The truth is that the key component for us, and I think for all the investment community, is to understand when there is going to be a vaccine to this virus. And until now, we are starting to see some possibilities for or a vaccine or a sort of a cocktail or something like that, but it's still not something that we can be 100% sure. But we think that there are a lot of opportunities that will emerge. So we are definitely monitoring the market, and we think that in a couple of months from now, the market is going to be very interesting to invest in.
Thank you, Robin. Cledden. We don't hear you. You need to unmute yourself. Okay. While Cledden is figuring out what's going on with his mic, Sanjit, can you please as well, before you start, give a quick 1-minute introduction of who you are, because you joined very last moment.
Can you hear me now?
Now, yes.
Yeah, okay, just 1 second. Lisa, can you hear me?
Yes.
Yeah, okay, fine. I've got a bit of a problem with hearing myself there. Hold on. I can just put it on. Just hold on 1 second.
Sanjit.
Yeah, I can hear. Can you hear me?
Yes, much better now.
Yeah, that's a lot better. Great. Yeah, so I'm the managing director of ST Capital Partners. We are a family office based in London, and we invest internationally, both on the alternatives, and we've recently started investing into liquid markets as well. Is that sufficient introduction?
Yes, pretty much. Now you can answer the main question. So how do you see the global investment industry? Is it a new risks? Is it bringing greater opportunities?
Yeah, I would definitely say there's definitely more risk. I fundamentally disagree with most of the people that have spoken. Basically, I think people are totally underestimating the situation. If you look at the UK, for example, the recession expected is going to be the worst one in 300 years. So I don't think we can just sweep this under the carpet and move on. If you look at IMF estimates as well over for the next 2 years, they severely doubt a V-shaped recession and more of an L-shape. That doesn't mean there's not going to be opportunities that exist, but I think just ignoring basic facts like there is no virus, so that there is no vaccine right now, everything will take many years to recover. If you look at the aviation industry, hospitality, such as IHG Group, Intercontinental Hotel Group, they're not they've just renewed their credit line at 1.2 billion. and many airlines are suffering a lot. And they do not expect resumption to normal numbers for another 2.5 to 3 years. So this affects people traveling, and it has multiplier effects in the economy. So I think there are potentially good opportunities, but I think at the moment, one of your panelists said that the main thing is to fight fires at the moment, conserve cash. Cash is king, which is why we've started investing into things like the S&P, where we made 10% in about 5 days, but it's liquid, so we can go in and out. In private markets, things are very illiquid. There's idiosyncratic risks to invest in certain areas at the moment as well, with regards to the regulatory regime or certain scandals that have happened in the Middle East, which I won't go into just now, but everyone will be familiar with. And this is having a profound effect on the market. So I'm not super bullish. I'm not super pessimistic either, but I'm realistic to the downside risks. And I think people have to wake up a bit to see those risks rather than think everything's going to be brushed under the carpet, which it certainly is not going to be, with billions being lost in the world economy and trillions eventually. So I think it's going to be a very deep, slow process, but things will recover. But if you're already invested in those things, then you know, Blackstone, Carlyle reported yesterday $42 billion loss. This is not a small thing. So I think these things should be addressed first, and then in due course, opportunities will arise in things like edtech, medtech, telemedicine. These are the popular things. The QIA, the Qatar Investment Authority, looking to invest into these companies, into these sectors with a large cash balance sheet. There are large sovereign funds that will snap up bargains in this process at decent valuations, but into thinking that everything will be fine next month. That would be my take on things. Lisa.
Thank you, Sanjit. Thank you very much. Cledon, did you fix your sound? Are you with us? Cledon, you there? Okay, yeah, I think Cledon didn't fix his sound. All right. Let us move to the second question then. To a more practical question. Hundreds of investors today are facing the question of how to work with their current investment portfolio. Because obviously not all investment projects fell into the trend of the new economy. Okay. All right. Hope now the sound problem is fixed. So obviously, not all the investment all the investment projects fell into the trend of a new economy after the lockdown. So let's discuss and try to solve the next practical case. The investment company has 3 ongoing projects: international project of online education, manufacturing of medical equipment, and international logistics company. Funds have been invested in each of these projects, and they are all partially ready. However, the investment is enough to only complete one project. So your task and the practical case is for you to choose and ensure the maximum cash flow for the 2 years. We assume that the lockdown will be relaxed everywhere. However, the restrictions on mass events, on travel will remain. Okay, so now I will also share a small presentation so you can have it right in front of you. And I'm repeating it again. We have a strategic investment case. So again, we want to hear your personal opinion. Which company would you support? We have 3 companies: online education, state of completion 70%. We have manufacturing medical equipment. The state of completion is 80%, and a logistics company with a 50% of completion. Which you have funds only to invest in one of these companies. So which one would you invest in to ensure a cash flow, a positive cash flow in 2 years? And if you select one of the options, why? So please, Ivica.
Yeah, thank you, Lisa. I mean, when I'm looking on opportunities, and I'm looking probably around 500-600 investment opportunities per year, coming from a pretty wide geography, not myself, but my team. And so when we would get these opportunities, or when we have these cases on the table, I would first would look into the capex requirements, which literally means cash out. And then I would look on the business model, if it's a long-term or a short-term business model, how much is really recurring and how much is not recurring. So to answer your question, not taking too long, 3 I would definitely not go for, purely for the fact that logistic is a very capex intensive business. So even if you would have 90% completed, you would still have a pretty significant cash out or liquidity cash out. Having a situation of 50% completion is even worse, which means you probably would have to work for quite a while until you will get the first dollar coming back. Secondly, the first one, online education, is definitely probably interesting from the cash and capex point of view, because online is usually not so capex intensive as long as you have the coding done already. So it gets down to marketing spending. But it's still a long-term investment. So education is something what you do over multiple years, and you get your money back with students, which might take quite a substantial amount of time. So I would go for number 2 for 2 reasons. First, in this pandemic situation, medical equipment is probably something what will be sold quite fast without thinking too much. And secondly, it's just from the level of completion, the most advanced one. So there's pretty much two strong factors to support my decision, but I'm sure that everybody has or might have a different view on that.
Thank you, Ivica. For sure, everyone is having different opinion. So I would like to pass on word to Shubham to hear his opinion. Make sure that we are thinking about this case in current economic situation, with the lockdown, with a recession, not like you would do before, or maybe not like you do in your real life, because some of you have totally different investment portfolio. But what would you do in this situation with current portfolio in current economic conditions? Shubham, please.
Thank you, Lisa. I think similar to what Visa says, I think logistics, especially the way you frame the problem, which is that restrictions on travel and conferences and flights remain. I think it would be, I wouldn't be comfortable taking the level of risk investing in that sector. It's really dependent on the global economy coming back to being as interconnected as it was, and we don't know when that would be. So I would find myself hard pressed to invest in number 3. I think 1 and 2 are where I would naturally be attracted. Um, Even though the problem says maximize cash flow over the next 2 years, I'd still like to go for online education, because I think in the COVID scenario, as we talked about, there are a lot of activities that were previously being done offline that will now move online. And I come from India, so there is a clear demand for quality education services to reach a vast number of students who cannot afford face-to-face education of that high quality. So I think from a demand perspective, I'm more naturally attracted to online education. The only thing that I worry about is, it's 70% complete and we need to maximize cash flow over the next 2 years. If this is a privately held or a startup company, the market is naturally illiquid. But I think I would still bet on number one and try and either do a secondary or sell my stake to somebody, because I'm sure others are looking at that trend as well. So similar line of thinking, but I would go for online education.
Thank you, Shubhang. Sagar. Sagar, we cannot hear you. Can you unmute yourself?
Yeah, sure. Sorry about that. I think both Evisa and Shubhang has already expressed concerns on logistics company and manufacturing of medical equipment, right? I think that applies to everybody who's looking at it. Both are asset-heavy businesses. Both require informal economy workers to complete the process or to complete the transaction or to put the state plant of manufacturing in place or supply the goods and services. So pretty much both of them are very asset intensive as well as labor intensive. So would be difficult given the constraints that you have at this point of time. But medical manufacturing would be a long-term play. So if there was no constraint, that would be the sector I would look at this point of time. Also, online education, and I think that's the best bet that we have at this point of time, given the options on the table. From a 2-year perspective, 5-year perspective, 10-year, I look at both India and Africa very closely. I look at a lot of tech businesses very closely. I think education has a huge potential. I think more than 500 to 600 million population between the two continents have limited access to education today. And it's an industry where democratization of education is going to happen significantly. A guy sitting in a remote village should be able to access the same quality of education who's sitting in the main cities or metropolitan cities of the countries. I think as Shubham rightly pointed out, I think state of completion is 70%, but given it's a tech business, I don't really see the challenges with completion over here. I think it probably would not require that much reinvestment in the business to complete it, but that would be the best bet given the cost of customer acquisition is going down. You have natural footfalls on the edtech applications today, and there's demand, there is supply at the same time available. So that would be my best bet at this point of time.
Thank you, Sagar. Ankur.
Hi. Interesting case we have here. So, I'm a big supporter of education and have quite a few online tech companies in my portfolio. So I will naturally, amongst the three, will gravitate towards that for a few reasons, specifically because a lot of my investments have focused in India. And so thinking purely from a point of view as a personal investor, as well as invest in what kind of investments we do. See, like I said, anything you do for 21 days becomes a habit, right? And a lot of kids these days, a lot of adults these days are resorting to online education. What it will do is it will open up this section. So people who had, or a lot of times what happened was that the parents were taking the decisions on behalf of the children. Now they studied in a very regimented environment. They studied, they went to school, they had professors, they had teachers, and they always felt that, on online education, I don't know what my kid is studying. And that has to some extent stunted the growth. And that is why the growth has not been able to increase exponentially in some parts of the world. But now that is going away because kids have no other option but to study online. Everybody's getting used to it. So I see exponential, huge growth in it. The issue will come to monetization. People will still not pay the same top dollars for online education, even if you have the same quality of instruction. And actually, I do have a background in digital education as well. To create those tools, it's expensive. So the issue will be monetization, that would the people pay the same amount of fees or for the courses that they take online versus something for which they go to Harvard or Wharton, and that is debatable. And so I think monetization will be an issue, and therefore, while the development, it's not a capex heavy business and it's more scalable being an online space, but I think the sustainability will have to last longer because it will take time. But monetization will come, as we have seen even in a capex heavy business like Geo Infocom. What they did was they started with almost free internet in India, and now General Atlantic Partners and Facebook and Microsoft, they're all coming in to pay huge top dollars and get a stake in the company. So I think that strategy can work in the online education world itself. Although just towards the end, I will say, so mine would be online education. Logistics company, 50% completion. So if you can slow down the development, you can conserve the cash, and you can wait out 2 years for this company to go live, a lot of existing companies will fall off in 2 years. And therefore, if you are standing or you are ready to launch yourself in 2 years, when a lot of existing players are falling out, and there will be demand, it will come back. It could be any letter, L, U, V. I'm not getting into that, but there will be demand after 2 years. A lot of existing players will fail. So if you can somehow build out, and that's one reason I think why logistics company is here, is because there will be demand 2 years, 3 years down, and a lot of existing players will not be standing at that time to meet that demand.
Thank you, Ankur. Hussein, what do you think?
So basically, since we're running a venture capital, we usually tend to shy away from any business that needs capex. So we would say no to the manufacturing of medical equipment. And as for the logistics company, we believe that there are so many rooms of improvements, and there are a lot of opportunities over there. It's very wide sector, to be honest, and very huge. And yet, because it's only 50% completed, we don't think that we're gonna go for it. However, when it comes to EdTech, we think it's very highly needed nowadays, and there are again a lot of opportunities, a lot of market to be acquired. So we would definitely support the online education company.
Thank you, Hussein. Robin, what's your opinion?
So I will take a quite different approach. So we believe that logistics has a huge potential in the future, although the main problem here is, if we want to maximize the cash flow, is the percentage of completion. But if we can combine it with an online activity or e-commerce activity, I think that it's one of the businesses that will be one of the most prominent businesses in the future. Regarding the online education, from my perspective, a very important component in the education is also the social activity inside the campus. And I think that in the long term, from my Western perspective, students will go back to the universities. They want to interact, they want to speak with people, and it's almost 50% of the education. So I won't go over education. If we are speaking about the next 2 years, I think the demand for medical equipment is going to be huge. Unfortunately, this epidemic and this new reality won't be over in the next 2 years, and we see that until now there is a huge lack and a very large demand for medical equipment. So we will definitely go for number 2.
Thank you, Robin. Sanjeet.
Can you hear me?
Yes, we can hear you.
Right, can you hear me?
Yes.
Yeah,
Can
okay.
hear you.
Yeah, so with regards to the case, I would say, all three look interesting. In terms of cash flow, I think manufacture of medical equipment could be quite interesting. We've looked at this sector at the moment, and we're doing some trading on behalf of some of our clients. It would depend on what type of equipment. There's severe shortages in Europe for certainly in the UK, of medical gowns and some masks. So I think if one injected some money into that and got the certifications quite quickly from the regulatory authorities, that could be quite good for cash flow, because there'll be abnormal demand for the next year and a half, I think, because as people go on public transport, they'll ideally want a face mask. There's a lot of work settings where protective equipment is required, not just in hospitals, but in a work setting. So I would say that due to the very high demand in the world for this, and the fact that there is global demand for this product, this could be quite interesting. I think education, as your former people mentioned, is quite interesting as well. Although it really depends on the type of courses. Are they language courses? Are they MBAs? How reputable is the institution? If this is a new institution, which I believe it is because it's 70% only complete in terms of funding, then it would be difficult because it takes time to build the reputation and stature of an institution. So I would say that would take longer to monetize. You need to spend more money on marketing, getting out the quality of the courses, hiring the teachers. It's not just a matter of online or offline. There's a lot of infrastructure planning that needs to go into that, and also a reputational and the development of the brand. Medical masks and equipment are more of a homogeneous product. And as long as they have the relevant certifications such as CE mark or FDA approval, a lot of institutions want that product. I wouldn't really comment on the logistics company because that's only 50% done, and it'll be draining the cash flow to put in the money, and then you're competing against large competition, big competition like UPS, DHL, etc. So I don't think that's not necessarily a great thing. And demand will be subdued at the moment, general demand, although e-commerce may make up some of the shortfall. I don't think it would be sufficient. So my bet would be on the medical, the manufacturing of medical equipment. Yep, thank you.
Thank you very much, Sanjeet. And I thank all of you for the opinions expressed. I hope it was a very valuable experience for you to hear different views on the same situation. And I, of course, hope to see you again at our future meetings. The coming summits will be arranged both to discuss the topics, the general issues and general challenges of the global investment industry, as well the events related to a specific problem or a specific sector, or a specific economy. And of course, separately on behalf of the members of our club, I would like to thank some of the leaders who have supported us for your sponsorship support. It's really valuable, and we thank you for it. Those members who have already confirmed meetings in your Schedule and Connecting Leaders app, you will be transferred immediately to the meeting room so you can conduct your one-to-one session. The ones who don't have meetings yet, you can go now to the Connecting Leaders mobile app and select and send requests to those participants who you would like to meet in private. So we can again arrange this meeting for you right away or later in the week. And I thank every viewer of our today's session. Thank you so much for being here with us. Look forward to seeing you again. And I'm saying goodbye to our viewers, and we can stay here and plan our meetings.